Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Happy Monday to everybody. Interesting day already. Apple came out with some new products. They were off a little bit. Apple, but the Dow was down. But interestingly enough, a lot of the Nasdaq was up. So I'm going to kind of just go through some stuff. I was buying a lot of stuff today. I was trying to get up a little bit more exposure than I have had. I in some of my portfolios, I'm 95% invested. I'm not. I'm almost there. We're in a power trend, and that's interesting. We're coming up off the bottom, so good time to be looking to buy stocks right now, and come out of cash. We're in a confirmed uptrend, and what that means really is that we've got a situation where you want to be more invested than we've been in the past, because it's just that's what the market is saying. That's what the indexes are saying to us. That's where we want to be. So, definitely something to look at here. I just want to show you the stock of the day. This is the IBD stock of the day. It is Fortinet, and I definitely bought it today. I've owned it before. It pulled back, and I had to downsize it because, of course, I try to follow the can slim rule. Anytime it closes 7% from where I bought it, I'm out. So I almost always have stop losses out there. But Fortinet, really interesting stock, just definitely something that you like to take a look at. I'm going to put it up on the live chart here. Let's see if I can get it up. Okay, FTNT is the symbol, and it's Fortinet, and it's a computer security software company, enterprise software security. Very, very good area of the market. We're in the buy zone, and what's so interesting about this is you can see where I made my first attempt here. I was trying to buy it right here, and we didn't do as well. Oops. Okay, come on. We didn't do as well. I tried to buy it there. It pulled back. I sold out when it hit here. That was my 7% rule. Then basically we came up here, and we're now in the buy zone. So you could buy this one right now, and it's not a bad place to buy it. You can see this is where I bought it right here, kind of at the top, but we're up in the after hours action, which is great. So let's see if we can get hold on here. Okay. No, a little bit slow on the uptake. Okay, well, that's interesting. Sometimes it doesn't like what I'm doing. There we go. Okay. So basically, looking at these buy points on this one, let's take a look. Go down here to the technicals. Right now, Fortinet is still buyable in this condition because it's 5% above the 21-day line, which gives us an opportunity. We're right in the buy zone, and so you could start adding a position here. I bought it today, 93 relative strength. As we can see that the relative strength line is moving higher, and so it's looking pretty decent. It's looking pretty decent. Let's see if I can zoom in on there a little bit to show you the technical action. All right. Hopefully we can see it better. There we go. All right. So basically, here's the pivot, 69. And then we came down. We bounced off the we bounced off the 50-day moving average, moved up, and then that's where I bought it, right about there. So hopefully you can hopefully you can see it. Yeah, there we go. There's the pivot right there. So definitely one you might want to take a look at. FTNT, Fortinet, and definitely one to take a look at. Here's what I've got currently. As I said, I bought Fortinet here today. That's down at the bottom. Then I also added Samsara. This is another one I want to show you. I made a little video on this one, put it out to everybody out there, and hopefully you saw it. This is another interesting stock. It's a tech stock. It was up almost 9% today with an incredible amount of volume 300% more than normal. So let's check that out. One out. IoT is the symbol there. That's Internet of Things. That's kind of their symbol. But this is the stock called Samsara. And as you can see, 99 relative strength. This is in the top 1% of stocks currently. And it broke out of a range, and there was a consolidation from about 1663 all the way up to about 2259. And then it broke out of that yesterday, and then it continues its move up. It's pulling back a little bit in the after hours, 2710, but I still think that, it definitely is looking pretty good. Also, another one that you might want to take a look at, this is one that I have started a position in, Fluence Energy, FLNC is the symbol on that one. Let's take a look at that just quick. FLNC, very interesting company. This company is a joint venture between Siemens Corporation and AES, which is a large electric power utility company based in Virginia, and they have a system kind of like Tesla's Powerwall that allows them to store energy when it's not needed, and that is really, really helpful with renewable energy sources, of course. And sometimes the sun doesn't shine, but this helps them capture that energy during those off-peak times. So it's really interesting. Basically, there was a reversal here. This is the reversal line, and then it moved up, and then it's sort of in this consolidation here. I've bought this basically two times at 24.74 and then 25.39. Currently, it's off a little bit. It's about $25 in the after hours, but still looking pretty decent in terms of the setup here. On the technicals, it's a little bit extended at 9% above the 21-day line, so that's a little bit extended. Excellent checklist, though. It rates 89%, so that's pretty darn good. And the industry sector is very good as well. By the way, I'm going to be covering the industry groups in just a second. So let's get a question first from everybody. I'm going to cover the sectors pretty quick here. All right. Hey, Lisa, thank you so much. NVIDIA support and bounce chances, please. Okay, I'll cover that in just a second. All right. Thank you, Sandeep. Palo Alto Networks to join the S&P. This is a really great stock. I've traded this stock before. The software security area is a tremendous area. Now, I bought Fortinet, which is in the same group, not quite as big as Palo Alto Networks. Palo Alto Networks is the best of the breed there. And let's see. Thank you, Anton. Hello, Jim. How are you doing? TQQ and Tesla, great. By the way, hopefully you're still in St. Bart's. That's a wonderful place. I've never been there. I've always wanted to go. Thanks for that question so much. All right, let's just do the industry groups quickly here, and then we'll get to everybody's questions. But thank you so much for tuning in. Let's go over here. Okay, well, I don't see it. Hold on. Let's see if it's... Put the camera back here again. Okay, well, we'll have to go. We'll have to do that in a second. All right, so let's take a look at everyone's questions. Let me take a question from TikTok. Let's see. Thank you for joining, by the way. I'm gonna have some new stuff coming to TikTok hopefully shortly, and that's gonna really help this. By the way, if you don't see the whole show screen, you can jump on over to YouTube, and you get a complete you get a better look at the show there. All right, so let's go back here, and all right, so let's go to Lisa, NVIDIA. Let's take a look at NVIDIA, and I don't have any NVIDIA. I wish I did. I was trading it, and I really missed the boat on this one. I mean, I should have had it, but let's take a look at now. The thing about NVIDIA is I would wait here for the pullback. Right now we're a little bit extended above the 21-day line, so not necessarily the greatest place to buy it. That's really the place that you should be looking to buy it, is right about here. And if we go over to the technicals here, we're about 15% above the 21-day line. So not necessarily the greatest place to buy it yet. So here's what I would do. I would probably wait a little bit until it gets about there. So we need to be basically at about 380, 385. That would be a good place to probably, if you don't already have a position, that would be a good place to possibly get a position there. It would be about 285 or so. I think it's a little bit extended, and I want to wait for it to move down a little bit. Really, we shouldn't be buying it this far above the 21-day line. We shouldn't. We should be buying it closer to where it gapped up. This is the gap up here, and so this is really the area that we ought to be buying it at. Now it's at 390. It's pulled back a little bit, but it needs to pull back another $10 really to before I would even start a position at about 380. So this is what's showing. We had this jump on EPS. It popped way up here, then hit 400. There's resistance at 400. It's pulling back, but I think it's going to get some support, probably at about the 10-day line. Let me see if I can see that. Yeah, the 10-day line, 365. I think you could buy it a little higher than that, maybe 380, maybe 375, but definitely want to wait until you get more of a pullback on that. That's going to give us your best chance, because it came up, got resistance here, and then it pulled back, and it's probably going to settle very close to where the gap up was, and that was right about here, about 365 is where the 10-day line is. That's probably the best place to buy it. So I wouldn't buy it here. Wait for it to pull back. It's probably going to pull down a little bit, and I suspect it's going to pull down very, very close to where it gapped up, and that's about 365. So you probably have to wait on this one. I wouldn't just buy it because it's up. It's a great stock, but we need to let it pull back there a little bit before really you can really buy it. So that's kind of my take on it. I definitely think it's going to bounce, but I think it's going to have to catch up. You got to wait for a little bit of time. Wait for it to catch up with the 21-day line or the 10-day line. Right now, the 21-day line is at 340. So, it's probably, it's going to be tough, because, if we look at the 60-minute chart, you're going to see, it's not giving a whole lot of a place to get it for us to get in. This was the gap up here on earnings. So you can see it came right up to 370, and I definitely think it's going to pull back, but that's why I'm saying about 385, 380, right in here, right when it pulls basically to right about here. That's where to buy it. So, but I think you just got to wait on it. Unfortunately, I think you just got to wait on that. All right. Well, hey, thanks, Sandeep. So appreciate it. Okay, let's look at the S&P 500. How would you trade the stock at this level? All right. Okay, let's look at Palo Alto Networks for Sandeep here, and give you kind of my 2 cents on it, how I would be trading it. Let's see if I can get there we go. PANW. Of course, this is in the software security area, just a tremendous area, enterprise area, and definitely something you should definitely have some exposure to this area. Here's the issue right here. We came right up to the pivot right here, and then it just this is a new floor, and now it's moved beyond the pivot. At 93 relative strength. It's up in the after hours. So here's what I would do with Palo Alto. I think it's going to form a new pattern here, and I do believe that there's a floor. Unfortunately, we're a little bit extended from the 21-day line. Where 203 is a 21-day line. So here's what I would do. I probably would just, the way the market is trending right now, I probably would just buy this. I probably would just buy this. Now, I don't own Palo Alto Networks. I've got another stock in the area, and that is Fortinet. So I want to kind of compare them. I just want to compare these two stocks because I wasn't able to get into Palo Alto, unfortunately. Let's put. Just looking in the last kind of month or so. Let's go. Let's kind of look at the relative performance in the last month between Palo Alto and Fortinet. Let's see. There we go. Well, boy, that's hard to see. Palo Alto is definitely the outperformer. Now I have Fortinet, which is not as good as the performance in the last in the last month of both of these software security stocks. So let's take a look at the comparison between them. There we go. All right. So unfortunately, my machine shows this in yellow, which is impossible to see on this screen. But basically, that's Fortinet right there, and then Palo Alto Networks. This is the comparison over the last month or so. Definitely, Palo Alto Networks is the outperformer here. So I think we can easily get. I think we can easily buy it here, even though it's a little extended. I want to look at. Let me just take a look at the weekly chart because that'll give us an idea if we can still buy it here. If you're looking to get in, this is Palo Alto Networks. So let's go over here to the weekly chart and see if we have, if we have something here to go. Okay, so let's just see if we've got it. Okay, so yeah, this is showing here on my charts. Basically, this is going to be the pivot right there, and then we're above the pivot, but we're not. Ideally we would like to buy it within 5% of that pivot, but on the weekly chart we could go a little bit more to 10. So currently we are just about 6.5% above the pivot, and they've had excellent earnings, so it's all looking very, very good there. So I do think you could buy it here. I'd like to let this thing pull back a little bit. What I would do probably is I would set a limit order to buy it right about here. That's where I'd be buying it, between 220 and 230, so about maybe 225 or so. That's where I would set the limit order to buy this, because what's going to happen is obviously it gapped up from here and then it hit resistance at 230 and then it's been pulling back. So it's going to pull back a little bit, and my guess it's probably going to reverse right about 225. So that's kind of where I would look. That's kind of where I would look to buy it. So I'd set limit order for 225 on PANW. That's kind of what I would. That's kind of what I would do. So set the limit order, a limit order, and if you know what a limit order, I'm sure you do. You basically say, I will buy it up to 225. So if it comes back down, then you'll get it at 225. I think that would give you a little bit of margin for error. It's tough when you don't have enough margin for error. So we want to pull back a little bit, and hopefully we'll get something. We'll get something good. But it's a great stock. It's definitely worth buying at that level. All right, what do you think about DG? It used to be called Data General. Boy, that shows how old I am. Man, this is Dollar General. There used to be a company way back when, before the IBM PC, called Data General, and I always think of DG because I learned how to I learned how to program some of those machines. Boy, I tell you, I'm getting old. But anyways, DG. Let's look at Dollar General. Yeah, this is the problem in retail. This is why we just can't right now. We got to be super careful and not take positions in retail, because look at this. It just fell through the floor at 200, and now it's all the way down. By the way, I don't know if you know this, but there's a company called Diebold. They make safes. They just fell for Chapter 11. Can you believe it? So, but this fell off the face of the earth. Let's look at the weekly chart to see. This is an example of why it is so very, very, very important to always have a stop loss. Why? Because you never know when this kind of thing is going to happen. I mean, it's just amazing. But you never really know when this is going to happen. And we're looking at the weekly chart here. Their numbers weren't bad. Their sales were up 7%, but their profits were down. This is the problem in retail. Retail is just hurting right now, and it's just not a place to be. I had a retail stock, TJX. I sold it. Because I don't have faith in. Home Depot is warning right now, and Home Depot is a major retailer, and they're warning the market. So, just the retailers just aren't looking as strong. And boy, so this is why it's so important to always, no matter what, put a market order limit in. I mean, a market order stop loss from wherever you bought it. So, like if you bought it at 200, you want to have that stop loss in. Basically at 186 would be right there. That'd be 7%. So this is when you buy something, always protect yourself with a 7% loss. Don't let his loss go more than 7% down, because it's really it's just tough. So would I buy this thing? No, unfortunately it's one of those things. I just would go, and if I took the 7% loss, I would take it as quickly as possible, because I just think that that's going to be a problem. So yeah, it's so tough. Let's look at CrowdStrike. This is another stock in the software security area for CRWD. And again, this is the enterprise software is starting to pick up. That's kind of where you ought to concentrate, looking for stuff. I did sell my shares here. I had shares, and I wrote it up, and then I pulled the trigger. But this also is looking fairly good. Let's go to the daily chart to see if we can find something that might work. One of the things that is happening, and this is showing us that this is getting to a point where we can buy it. Notice this red line here. And notice this black line. This is the 200-day moving average, and this is the 50-day moving average. Notice how this 50-day line is going to cross above the 200-day line. When that happens, that's called the golden cross. It's very bullish. It's a bullish signal. Now, you'll notice on this chart that we're getting support right at the 10-day line. So let's look at where the 10-day line is. The 10-day line is basically, we're right on the 10-day line currently at 152. We're currently at 153. Now, we're a little bit above the 21-day line, but this is not a bad place to buy it at all. It looks like we're going to bounce here. It's already tested the 21-day line, and it's gotten support at the 10-day line. So this is a good place to go. It's obviously going to make it's going to make a move to the upside, because we're starting to see the buyers come in on the volume, as you can see that. So definitely something. This is definitely something that we could add. We could either add here, or we could start a new position. And it's looking really good. Good checklist on this one. The only thing it's failing on is it's got a fair amount of overhead supply, because it's more than 15% off of its all-time high. Let's look at that just really quick. Going over here to the weekly chart, and you'll notice here that if we kind of go back, if we go back a ways, you can see that a lot of people bought it back here when it was a little bit higher. So we do have a situation where, we're going to probably most of the overhead supply has been washed out, but as it moves above this, as it starts to make this move here, then it will gather steam. So looking very, very good. Look at the sales on that, 42% up, and the profits up 84%. So that's really strong. So you definitely, let's see what Pattern Rec says on this. I think it can be bought right here, right now. It says it's, it says it's 47% below the pivot, but this was a while back ago. This was back in 2021. So basically, it's definitely viable here, and it's definitely a good group to be in, is the software security area. So yeah, really good area. Thanks for that. What is the power trend? What is the power trend? Well, power trend is a kind of a, I don't know, it's not really a, oh gosh, how do you say it? It's not really an official indicator. But here's the thing, that it's basically, it's very similar to a confirmed uptrend, but it's a confirmed uptrend kind of with some extra oomph. And it's basically when the NASDAQ, the Dow, and the S&P 500 all break out kind of at the same time. Let's take a look. I'm going to kind of give you those best I can explain it here. Is let's look at the spider compare. What I'm going to do here is I'm going to try to show you kind of what is going on. There we go. There's the spider. Let's add the QQQ. These are the ETFs that cover the major indexes in the diamond, the DIA. Oops. There we go. All right. So hopefully you can see this, and we're just going to go to maybe there we go. Okay. So, right. All right. Okay. So these are the three major indexes. The three major indexes that are represented by ETFs. There we go. All right. Unfortunately, the QQQ, my screen gives me bad color choices, so it's sometimes real hard to see this. But you'll notice that the lagging index currently is the diamond. That is the Dow Jones. The spider 105. See, the Dow since the beginning of April, Dow is flat. Spider's up 5%, but the Qs, which is the NASDAQ, is up 11%. So that's kind of what's saying. But basically what we're talking about here is they all sort of took this upward leg at the same time. And that's showing renewed interest. Normally they don't all necessarily run in tandem. You'll have a laggard, you'll have one that moves down. So this is kind of what a power trend is, where we sort of have the three going at the same time. You'll notice, like back here, this isn't a power trend, and the reason isn't because even though we had upward trends there, we still kind of had a downward trend there. So this is not a power trend, and this is a power trend, and that's kind of giving you, but when they all break at the same time to the upside and with volume, that's typically what the power trend is. So anyways, but definitely something that I watch because it gives us a signal. To get in. Hey, thank you, Pritesh. Amazon is looking good to me. What do you think? Okay, well, let's take a look at Amazon. And of course, it's been down for a long time, but it does look like the big cap techs are starting to see some love now, because it's been a while. It's really been a while. So let's jump on over to Amazon. Right, there we go. All right, there's Amazon. Okay, so here's the thing. Here's what's great about Amazon. You're absolutely right. You've got good instincts, and here's why. Let's take a look first. By the way, you can do this. You don't have to use my software, MarketSmith, the software that I'm using now, to do this. I've been looking into just using Yahoo to do this. I haven't quite configured it right, but this is something that this is a sign that you can do on just about any charting software, and that is if you have a 50-day moving line and you have a 200-day moving line, and the 50 moves above the 200, that shows it's getting ready to make a move. Okay, so that's very bullish. Also, you'll notice that if you're looking at the volume, you notice that there's more blue bars than red bars. It's really starting from where that volume spike happens. Now, here's the interesting thing. The amount of people willing to sell is moving lower. That means that that's actually very bullish, believe it or not, because most people aren't willing to sell at the price that are offered. So this is a volume signature of getting ready to move higher. So I definitely think you're right. I think you're onto something. I think it's likely to move higher. The question is, what's the best entry for it? I've shifted over here to the weekly chart. They came through earnings, and their sales were up a little bit. But what's really critical is their profits were up, and that's really the driver. Also, you'll notice if you look at the thing, they're estimated. They're really estimated to be flat on earnings, but it does appear finally that we're getting some love here. Now, here's the problem with Amazon. I just want to show you this. Right, currently this is the level for Amazon. You'll notice, and it's really hard to see, but there is a little line here, okay? And this is called the overhead supply line, and it's at 18 months. You'll notice that if we go back 18 months, everybody was buying it higher from where it is. So this causes resistance. This causes resistance on the stock. As it moves higher, more and more people that may have held it are potentially going to sell it. So that's what they call overhead supply. Fortunately, though, the overhead supply is a little bit almost a year ago. So most of the people have realized their losses in Amazon. So, but there is overhead supply. This is one of the reasons why it's lagging stocks like, well, for instance, another big cap stack like Google. But you'll notice it's coming up there, and it does look really good. The relative strength is improving, 91. So the question is, can we buy this at a good spot? Let's look at the pattern recognition on this one to see. You see, we're still 29% below the pivot. Now, but the pivot was 101 weeks ago, which means that most of the overhead supply has been taken out. The last what they call base pattern was way back here. It's way back here. So this is why this is what they call overhead supply. So there is a situation with overhead supply. The question is, can we buy it on the technicals? Let's look at that. I'm going to go to the daily chart. Typically for an entry, I'm always looking at the daily chart. We're very close to a good place to buy it. The 21-day line says that it's right now it's 7% above the 21-day line. 116 is the 21-day line. So the question is, can we buy it here? Well, what I would try to do in this situation is see if we can get a pullback to basically about 120. That's where I think that that would be an ideal entry point. So if we did it that way, here's how I would do the order. I would put a limit order for 120 on Amazon GTC. Good to cancel, and that's kind of how I would. That's kind of how I would look. That's kind of how I would look at it. But on this one, I wanted to buy it right about 120. I think that we're going to see it probably pull a little bit lower. You can see it's moving lower in the after hours. So I think it could potentially move down as much as $5, and that might be a good place to buy it, because I think you want to buy it close to that 10-day line. That's where you want to buy it. You don't want to buy it up here because it's already a little bit extended. So that's what I would do. But Amazon is looking good. I wouldn't buy it directly until it pulls back a little bit more. That's kind of what I would do. That's kind of what I would do. All right, let's look at PayPal, one of my favorite stocks. I haven't traded this in a long time. I love this stock. I made a lot of money on this stock several years ago. This is a tremendous company, and but it like many of the financials, it's really had a, it's sort of had a it's sort of had a move lower. Now let's take a look to see if this is a place that we could do some bottom fishing. I don't normally like to do bottom fishing. But PayPal is starting to get on to get into a situation where we might be able to do something. Right now, I wouldn't buy it, and the reason I wouldn't buy it is for this very reason. We're below the 200-day line. Also, look very carefully, and I don't know if you can see this on the screen here, but the 200-day line is moving lower. It's sort of bending lower. That means that over the last 200 days, the institutions are still selling it. We want to wait for it to be level and move up. I know these are very subtle things that I'm telling you, but we have a situation where the institutions are still net negative on this one. So we don't want to buy it yet. We want to wait. Also notice that the 50-day line is below the 200-day line, and the 21-day line is below the 50-day line. Now, this is obviously to look at, but what this means is that in the short term, there's more selling pressure. We want to buy it above the 200-day line. So here's what I would do. I would just wait. And you've got to watch this one, unfortunately, see if it comes above the 200-day line. That's what I would do. I like the stock, but I think you got a watch list. PayPal for now. And I really do think you have to do that, because it's just the kind of situation where it's just below that 50-day line, below the 50-day line, below the 200-day line. It's just not a good place to buy it. So I would wait on this one. I would wait to buy this because it is a good stock, but I just think it needs more strength. It needs more strength. All right, let's look at HCP. See how I'm doing on time here. Okay, doing pretty good. HCP. Okay, let's look at HCP. And I don't know this company. Multi-cloud infrastructure automation. Interesting. Okay, I like the area that it's in. I like the chart. We're seeing a cup here. This is a cup coming, the peak being at 37, and it's coming all the way over here. So it's making kind of this cup. It came down and it tested the 21-day line. That's a good thing. We want to see that, and it made a move up in the after hours. That's very good. So we can see it's coming in the cup. It came down. It tested the 21-day line, and it's starting to make a move upwards. So what could you do here? How could you buy this? Well, let's put what they call reversal line in there. That's a line. So here's what I would do on this one. If you wanted to buy this one, it's 84 relative strength, and we're starting to see the golden cross appear with the 50-day line moving above the 21-day line. The 200-day line, almost there. So it's starting to see strength, but it needs to come back and move above about 35. So here's what I would do. And we're at 35 after hours. Notice, isn't that interesting how that worked? It came down, it tested the 21-day line, and then boom, right back up to 35. So this is going to probably make a move higher. This is an interesting one. I don't know this company. I have not looked at the stock before, but the checklist is good. The technicals are very good. We're almost at the 21-day line. We're 6% above that. So you could buy this at 35. You could definitely buy it at 35, but I would do a limit order. I you could buy it at 35. So 35 or better. So I would do a buy stop limit order. And what that buy stop limit order does is that if the stock moves up to the stop price, which would be in this case 35, it activates the order and then it lets you, and then you would buy in at 35. And I like to put 5 cents more. So here's how I would buy this one. I wouldn't buy this. I want to see it move past. I want to see it move past and hold the 35 mark. I don't want to buy it below that because it may continue going lower. I don't think that's the case based on looking at this chart, but I think the ideal place to buy it is, the ideal place to buy it is right around this 35 right here, because I think it's probably going to go higher tomorrow. It's going to bounce probably like this. That's my guess. But one thing, and I didn't look at this here, but it's got earnings in 2 days. So here's what I would do. I would wait 2 days. Don't buy it before earnings because it may reverse lower on you. So that's what I would do. I would wait on this one. So I would wait for earnings and then just, I might buy it, but I'm going to wait for earnings on this one. So that's kind of my take on it. I would wait. Oops, that's PayPal. Yeah, I would wait for earnings to buy this one, because earnings are going to be, on this one, earnings are going to be basically, on the 7th. So it's the 5th today, so that's going to be Wednesday. So Wednesday after the hours is going to be when they announce earnings. So I would wait. I would just wait on this one. I just don't think the setup is strong enough. That's my take on it. But thanks for that very, very much. All right, let's see if questions from TikTok. All right. Thank you, everybody. By the way, if you're watching on TikTok and you want to get the full experience, not that that's any great deal, jump on over to YouTube, and we're on YouTube live right now. So there you go. All right, let's look at SHIP. Thank you, Troy. I hope things are great up there in Toronto. SHIP. This is a ETF, I believe. I believe that's ETF. I think that's right. Yeah. No, I'm wrong. I'm wrong. This is actually a company, not an ETF. They've got a great symbol. Not looking overall. The chart's not looking good. We're in a downward trend. Don't like that. Let's go over here to the daily. Yeah, we're starting to see some interest at 4. There seems to be a floor there. 14 relative strength. This area has been growing. It has been gaining strength. So, but there's certain things I don't like about this chart. If you'll notice, we didn't really have a golden cross here. We had an opportunity. It's making a move, and then it moved lower. So this is still a downward trend. I just don't like to buy in a downward trend, even in a strong market. I just don't like to do it. We're below the 21-day line. So if we look at the pattern recognition, nope, there's nothing to go here. I would avoid this one. I would avoid this one. It's interesting. Maybe watch list it, but I would avoid it. So, where's the oil going? You're right about that. That's a good thing to look at, because the Saudis, here's the thing. The Saudis moved, they raised the price of crude. I mean, they lowered their production. And so that's definitely had an effect on the oil. I'm going to take a look at the West Texas Intermediate to see kind of if, I just want to look at the chart on that one. I haven't looked at it for a while because I'm currently not in any oil stocks. Let's see. Let's see if I can. Okay. All right. Let's see. This is just looking for the oil index. Okay. NASDAQ 100. Where is it? So let me see if I can Well, I can't. You can get the utilities. Huh. Well, one thing I can do is look at the XLE. That's the one. Let's see how the XLE is trending. That's kind of my go-to, is to look at the to kind of figure out what's going on in the energy sector, is to look at the to look at the XLE, and it does look like, yep, looks like we're up. That's interesting. Okay, we had we that's not a great event, but it seems like it's moving past the 21 days. So yeah, it's still in a downward trend. So unfortunately, with oil, that's the reason the Saudis are are restricting production, because they want to get that price up. Yeah, so I would just stay off of that for right now. It's just it's just the way it is. Thanks for that comment. I appreciate that very, very much. All right. Well, one last thing, and I'm just gonna go through really quickly some of the let's see if I can do that. The industry groups, kind of see where the strength in the market is, and then, right now the strength has been sort of in the, has been sort of in the computer area. I mean, that's really just sort of how it's been. Let's see if I can, let me scroll here. There we go. All right, so let's jump on over to the industry strength, the industry groups here. The full effect here on the industry groups. And let's see. Okay, well, the top group currently, computer hardware, peripherals, software, education, database, CRM is it. Now, interesting ticker here that is setting up well. Just want to put this out there. And this is, of all things, the home builders. It's Green Brick Partners, GRBT, Green Brick Partners. So that's something that you might want to take a look at. We're starting, computer software, desktop, that's basically Microsoft. Wingstop is looking pretty good. And let's see if there's some other ones that we should be looking at right now. Computer software enterprise. Okay, this is Monday.com. Oops. Let's see if we can show that for everybody on TikTok. There we go. All right. So also another very strong area, computer software enterprises really gained strength. It's 19, SAP, Shopify, and Monday.com also very good. They're all set up very, very nicely. So those are the ones kind of that potentially have a good look there. All right. Well, I guess I'm kind of at the end. Thank you so much, everybody, for taking a look today. I'll be back tomorrow at 5, and hopefully I'll see you then. And by the way, if you're interested in that, and you probably have to freeze the frame on this one, but if you're interested in looking at the industry group strength list, I put it up here. I don't know if you can see this. So it's in the comments. So just go to the comments and just put this in your browser, and you ought to be able to see this. You ought to be able to see this. For everybody on TikTok, I'm probably gonna I'll probably after the show, I'll probably put this in the comments so that you can take a look at the industry group strength spreadsheet. But but this is the industry group strength list, and there it is. So it's kind of complicated, but it's definitely in the comment section at the first comment on YouTube. So thanks everybody for taking a look. I'll be back tomorrow at 5 o'clock. Till then, happy trading.